Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're jumping down into the world of Polygon's 𝗕𝗘, taking a look at what's been going on most recently, what we would expect to happen next and all that wonderful stuff. As we get into this video, if you find it useful and informative, hit the like button. I do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe? You will be kept up to date with all the streams and videos that we do here at Cheeky Crypto. And don't forget, join us down in Discord, links in the description down below. We cover a lot more in our Discord server than we do here on YouTube. Okay. Let's get into this, right? So 𝗕𝗘 paired up with USDT on the hourly chart. Binance is the data source. Now, at the point of recording this, we're seeing a little bit of an upward directional move here. I think there's some news broken out in the US about a jobs report, and basically, I think that we've had a little bit of an uptick with the price action on the back of that. However, I do think it's going to be short term, and we are likely to see reversals shortly, in my opinion. And I'm going to show you why I think this in just a moment. Okay, so as we kind of shoot out of this just a little bit, we can see that we are on part of a bigger macro 5-wave structural drop down towards 1501 and 2378. Okay, this is our 1.236 to 1.618 fib levels based on our wave 4 movement up here with our macro. Okay, so this is basically a big structural move to the downside. Invalidation of this structure to the downside was set at $1.30.6, which we failed to hit. Still possible that we could go up there. I think it's highly unlikely though. Let's go into what's been going on most recently. We had the 5-wave drop down to the downside, a little bit shorter of our expectations. And there's a couple of reasons for this. Sometimes the wave 5s are a little bit short on their typical 1.236 to 1.618. It's unusual, it's rare, it doesn't happen, but it can. And the other scenario is that maybe we're just invalidating our 5-wave structure to the downside altogether, and we are, it's just 3 waves down looking for that 5th wave up higher, which of course would take out that potential $1.30.6. So it's always possible. Okay, so we'll keep a close eye on that. We also are tracking a potential 5-wave structured move to the upside here. Okay, this is probably one that's the most interesting right now. If we just come down here, we can see this little wave 5 low point down here. And if I grab hold of this wick high and this wick low, move this over to our pullback, which is just here, we can see that we've just gone past that 1.618 times of that structure. And basically this 1.618 fib level is basically a 161.8% times this entire structure on the left here. So what that means is basically we can no longer treat this as a 3-wave structure. We have to treat it as a 5-wave structure. Now with that, basically we go up into 1, down for 2. All of this is 3. We'll look for wave 4 in a correction, and then we go up into wave 5. Now, with that being said, we have some interesting things. Let me just remove that line. We don't need it, and we no longer need our fibs. Okay, so with 5-wave structures, you don't tend to find 5-wave structures on their own. We've got 5 waves down here, and we've got 5 waves up there. That would be incredibly unusual, which means we're probably going to invalidate one of these structures at one point. Like I said, we did not hit our typical wave 5 structure down here, so it's always possible that we are going to be moving up before we move on down and all that kind of wonderful stuff. Okay, but we're keeping a close eye on these things. Now, down here at 83.4, that's an invalidation. Let me just check. I think I can see a wick. Yep, that's right. So 83.4 cent. Okay, if the price of wave 4 here was to drop down across that point, this is no longer a 5-wave structure, it's just a 3-wave structure, and that changes everything to the upside. Until then, of course, we could look at this as a 5-wave structure up, and then of course 3-wave structure down, and then another 5-wave structure up. Okay, that there would still be in line with our wave 2 535 zigzag, or otherwise known as just A, B, C. That's always a possible scenario as well, so we're keeping a close eye on that variable. And alternatively, as I said, we just break down and it's a 3-wave structure, and that wave 2 is then here, for example, then we can carry on moving down. So there's a couple of things we've got to be a little bit cautious on, but right now, because we have not invalidated our 5-wave structure move, we are looking for wave 4 down, we're looking for wave 5 up afterwards. Now wave 4 is typically 38.2% of wave 3, so we can go ahead and just draw a fib line on here, grab hold of this, and then we go ahead and just grab another. I'm going to range this out, actually. I'm going to range it between our 38.2%, okay, and our 50%, okay. That basically puts us right down in this sweet spot here between 85.23 and 83.42, getting very close to invalidation. So that would be our typical kind of wave 4 area, according to the fib levels. And then of course from there we are going to have that typical kind of estimate. If I just take the higher end of our wave 4, for example, 1.236 to 1.618, 92.8 to about 95. But again, a lot can happen before we can get to that point anyway. So With Matic here, let's take a look at what's going on from our momentum. Okay, so not only do we have Elliott wave theory mapping out our structures, and I am a little concerned over this one here. This is just a 3-wave structure, by the way, guys. So we measured this out. This is not 1.618, and I can check that. So we are just in 3-wave structures at the moment here within the subwave count. And we'd have to go up higher than 92.4 to make a 5-wave structure within wave 3 and overextend it and all that kind of wonderful stuff. That being said, though, on our hourly chart, this is probably the thing that we want to be paying attention to on our stochastics, we're overbought, okay, basically meaning that we are likely to have some kind of pullback to the downside imminently. On the 4-hourly chart, we can see, of course, that we are in the overbought area. On the 8-hourly chart, we're up in the overbought area. On the daily chart, we're up in the overbought area. And on our weekly chart, you bet it, we're up in the overbought area. Any guess on what that might mean, guys? It means that we're going to be seeing some significant room to the downside, meaning that we are probably, in my opinion, going to invalidate our 5-wave structure to the upside here. This is going to become our 3-wave structure, and we're going to have another 5 waves taking us down lower, because our objective, guys, as we said earlier within Elliott wave theory, is 15 to 23 cent. That seems absolutely bonkers, but it is unfortunately what happens when we push up so high with wave 4 and fail to actually invalidate the wave 4 and wave 5 structures. So essentially, we are still looking for a pretty significant 73% pullback from our current position and to the upper end of 23 cents. So we've got a lot to kind of think about here for Polygon's Matic, and if we do start to see a significant drop down as indicated with the momentum indicators on the weekly, daily, 8-hour charts, then we should be expecting some pretty significant downward momentum in terms of price pressure for Polygon's Matic. So we're keeping a close eye on those things, but for the most part, I'm super excited to scoop up some Matic at some really good discounted rates, and I'm pretty confident that we're going to be moving down significantly in due course. So guys, I'm going to leave this video right there. If you have any questions, join us in Discord. You can mention me down in the Discord server, and I'll try to get back to as many of you as possible. And until then, have a fantastic day, and I'll catch you in the next one.